Thanks everyone for joining on what is gearing up to be quite an interesting day actually. Spanish bond yields on the rise yet again. We've also had a further really dip low. It looks for the moment anyway like we've lost control of that 121 handle in euro dollar. We've got a lot of economic data out today, which could really propel the market higher. So it is certainly worth watching out for that one. Let's just take a quick look at the charts, really. Let's just go through it, see what this all means. There's a ton of stuff that's going around, obviously with what with Spain and everything else. But let's just take a look at all the different, let's take a look at what that translates into, because we know a lot about, what can go on with Spain, but how does that actually have a market impact? Well, interestingly enough, let's go straight to sorry, just bear with me one moment. I'm pulling up my charts. My usual charts, unfortunately, are not working today, so we're going to have to look at my other ones. Just bear with me a moment, and I'll bring you guys online. Now, this is what I'm showing you. This is euro dollar. It's a point and figure chart. The one thing you'll notice about point and figure is that it doesn't have any time across the bottom, so it's pure price. So each box that you can see in this chart represents just pure price. And as you can see here, this is euro dollar. It's on an intraday basis, which includes yesterday and today. And we've really been, we're getting lower, even in the shorter term. We are getting lower. Today, we haven't managed to stage as much of a rally as we were yesterday. We've got a series, just even in the very, very short term, of lower highs. Finding some really nice support, though, around that 120.45 area. And we do know that if we do break below there, break below kind of 120.43, which is the low from yesterday, would really open the door, not just to a move below 120, but back down to that kind of 118.95 level, which was the low from June 2010. So that was the low that we got during the first of the Greek crises. That's what really could kind of push us below, could really push us easily through that 120 area. Now, I don't say that we out of disrespect to that 120 area. It's a major level. We all know that. Just over to one moment. Oh, apologies, guys. It's a major level. It's a psychological level. It's significant on a historical basis. Thus, it does need to be respected. However, one thing I would say, not only will kind of what 120 is meant to be quite a big option area, but remember sometimes, when I also think that kind of when we get through that 120 level, it could really activate some extra selling because people would then target that kind of 118, as I mentioned, that kind of 118.95, just below 119 level, which could potentially open the door to a move to 115. So that would be a breakout to the downside, which could really extend losses in this pair and bring us down to real multi-year lows, not just those June 2010 lows, but the lowest levels of the Eurozone crisis so far. So let's just take a look, though, at kind of the levels. Why I'm looking at these pointed figure charts is that they're really, really useful. And why I'm looking at it on such a tiny time frame is that right now, if you look on any of the kind of the daily charts or the longer term charts, they're not really telling you anything. It's like, okay, yeah, there's 118.75 or whatever. But what we know with euro dollar, it's very much more of a meander lower. It hasn't necessarily been this kind of big, short, sharp drop lower. It's been much more of a meander lower. And that is also worth kind of pointing out because in that environment, you really need to know, what are the steps lower back to that kind of breach 120, breach of kind of even that 118.95 level, and what are the steps higher? What are the resistance levels? If we think that we're going down, and we think we're still in a bearish bias, things don't necessarily move in a straight line, as we saw earlier during the Asia session when we saw euro really stage quite a nice recovery. So right now, it looks in the short term anyway, 121.10 is the key resistance level. It is the level to beat. We didn't get above there. In fact, we rejected that 121.10 level. Whereas on the downside, we've got 120.55 and then obviously 120.45. Now, that doesn't sound very much, but remember, we're at such kind of stretched levels that really every point counts. So you do need to take that into consideration, that everything does count. There really is a need to one does certainly need to check all of these levels. You can't just kind of ignore some levels, because if you are a very short-term trader and you sell the hell out of something when it got to kind of 120.50, well, really you might be in for kind of a fool's entry point, really, because that could be the level where we see just a mini bounce. So it's more like getting, well, okay, fine. Where are the support levels? Where are the resistance levels? Where are the support levels where it might bounce a little bit? As I said, 120.50, then 120.45. Where are the resistance levels where it might start selling off a bit? Again, as I said, kind of all the way really leading up to that 120. I'd look at this first, which is 120.80. And then obviously 121.10, I think at that point it's going to look very stretched. But it does seem at the moment like we have thoroughly rejected life above that 121 level, as you can see here. So again, crosses are when we go higher. The zeros are the noughts are when we start to fall. So a really nice clean rejection of that level. So suggests that kind of bounce higher above 121 was really just a little bit too far. Too far. It's a bit of a false break higher. Now, just over to you a moment, because I'd also like to show you Euro Sterling, which is it's been another big mover. Obviously, today we have got UK GDP data out. I'll show you I'll show you the chart in a moment. Sorry, it's just this one. You really need to see it like this. Hang on. Right, here we go. This is a 30-day chart in Euro Sterling, and I mean, what a story it tells. I mean, this just says, Euro is giving up ground every day basically versus the pound. The pound is attracting obviously those safe haven flows. But remember, next week we have got a Bank of England meeting. We have also got an ECB meeting, and interestingly enough, there are calls from both sides to really start doing something. So to cut interest rates, either at the Bank of England. Or maybe at the, and most certainly to cut interest rates further at the ECB. So to really have a very long, sustained period of very low interest rates, maybe even negative on the deposit rates there in the UK. So right now, in the Eurozone, sorry. So right now, it looks like one of the only ways out of this Eurozone crisis is through the ECB. And that becomes very important. That has huge ramifications for what's going on with the currency markets, because the euro is so driven by yield. So anyway, that's the spiel. What does this all mean for Euro Sterling? Well, look here. I mean, our forecast was 75 to 82. It looks like we're heading down to 75 very, very quickly. 77.50 is a very good support level now. And obviously, your downside is kind of unlimited. If we can go back, we really can. We can go back a long way in Euro Sterling, and kind of go back to kind of those pre-2008 levels when Euro Sterling was back at these type of levels. But in that environment we were going up, whereas now we're going down. And the downside at the moment seems slightly limitless. Now, what could slow it down, of course, is the Bank of England acting very aggressively. And maybe some sort of, maybe some sort of crisis in the UK whereby all of a sudden sterling's not considered that type of safe haven anymore. So that's another thing to watch out for. But as I said, 77.50 right now, very, very good support. Now, if you just look just at this little section today, so I know I'm really narrowing down our time frames, and this is the thing to do. I always think at these levels when markets have already moved quite far. But yet it still feels like there could be further to go on the downside. And what I would say is it's really testing that 78 level now. There does seem to be a little bit of push up in it to a little momentum behind it, which could push it higher. Obviously 78.25, then 78.50 become your major resistance level, certainly in the short term, 77.50 on the downside. So certainly in the next kind of few hours, you know, time will tell. If we get a very, very weak number out of the UK for GDP, so the market's expecting 0.3%. That's the average from the Bloomberg survey. Capital Economics, I know, are looking for minus 0.5%. Sorry, when I say that, it's minus 0.3%. They're looking for an extension of the UK's recession, unfortunately. Then you know, any downward surprise, so anything worse than minus 0.3%, could really send this pair moving higher. Actually, we do also have the IFO coming at half an hour before the GDP from the UK. However, I think the GDP in the UK is going to be important because obviously, you know, all of a sudden, if you've got another quarter of very, very weak growth, then it probably suggests that the Bank of England is going to have to revise down their expectations, that our deficit targets are going to slip, and that things are not fantastic in the UK. So that's certainly worth watching out for. In that environment, we could see this pair really stage a bit of a rebound, and a breach of 78.50 could be on the cards. However, again, like kind of anything in the kind of environment that we're in, you know, euro sterling is a risk trade, so it's going to be sold on any strength, we believe. So a move towards 79 could easily be a great selling option in euro sterling once all the dust settles post this data release. Obviously, a better than expected GDP report from the UK, and by that I mean it could still be negative, but maybe not as bad as some expect. So maybe not as bad as that minus 0.3% people expect. And we could see a breach of that 77.50 level. So do watch out there because obviously, you know, I think a lot of the markets, yes, they kind of understand why euro sterling is doing so badly. However, you know, the foundations on which the pound is considered a safe haven are very, very shaky. And data like today's GDP will be very important. Also, not only that, but next week we have got the PMI surveys, etc. We've got the Bank of England, etc. And that's going to be important as well. So we're leading into a big week of kind of macro data. Okay, now the other one that I really want to show is euro yen. So I'm looking at all the euro crosses, but you know, again, you kind of you know, they're a big deal, and euro yen is having a very similar pattern to euro sterling actually. Obviously, it's kind of had a larger overall move. It's reached kind of fresh 11-year euro era lows. 94 though, acting as very, very good support in this pair. We're still very bearish. We think the next support lies at kind of 93.50, then maybe 93.25. To reverse our view, we'd really need to get above kind of this 95 level, which is this top here, so kind of around 95, 95.15, to really open the way for a move back towards that 97. And of course, for that environment to happen, this is so sensitive to risk, this euro-yen pair. We'd have to hear one of two things. Either number one, the Eurozone crisis calms down a bit. Maybe we get some news out of Europe, something that would kind of calm the near incessant rise in Spanish bond yields. Or number two, we'd get some sort of intervention from the Japanese authorities to weaken the yen. So there'd be a few things that we'd have to look out for. But as I said, that 94 level acting as really, really nice support, but it could be breached. Remember, it's very, very sensitive. Any negative headline, we could easily get down to that 93.50 level, maybe even test that 93.25. But obviously, the closer we get to that key 90 level in this pair, because it's so psychologically important, the more likely we are to really see the Japanese step up their rhetoric to try and make sure that that things the more likely we are to see them really step up their rhetoric and try and weaken the yen and maybe even intervene. So do watch out for that. There is definitely intervention risk. We heard a lot from some new Bank of Japan members yesterday, and they were very concerned about the currency and about the strength of the currency, blaming that very much on what was going on or blaming that very much on a weakening economy in Japan. Okay. bear with me one moment. I want to show you gold as well, because I know some of you are big fans of gold. Of course, some of you less so. But here we go. This is gold. This is just my normal 1 year chart. And I'm just showing it to you because it really shows kind of where we are with gold. Haven't really been able to make much traction above this kind of 1590 level. That's a really, really key resistance level now. We are testing it. It's the 50-day moving average. It's the pink line on this chart. We are very much range bound, with the downside being capped around that 1550 level and the upside not really making too much traction above kind of 1625. So we're in about of 100. We're in a mix of kind of about 100, about $100 or maybe $75 range at the moment in gold. Gold has been remarkably calm over the last few days. I think that's, at the moment we haven't had capitulation. We've had capitulation to some extent in the bond market. That hasn't really been reflected in other asset classes, which is really interesting, I think. So, really, I think we need Spanish bond yields to push above that kind of 8%, maybe even get a little bit further. It seems like that kind of line in the sand, 7%. Well, the goalposts have shifted a little bit, and it's really going to take a move towards kind of that 8%, maybe even 8.25%, for us to actually see panic station spread to other asset classes. So, for euro-dollar, euro-dollar certainly it's on an ascent lower, absolutely, and it has been for some time. But it is a bit like a grind. It's not like, we're not having these kind of whirlwind moments whereby, you get like 7% drop in one day. We haven't seen that, and that's really reflected in gold. And gold is very sensitive, not just to gold is very sensitive. It's sensitive to kind of the inflationary environment, to overall kind of risk aversion. It's certainly not a safe haven. Let's put it that way. But right now we seem to be a bit trapped, and until maybe we get some sort of news to really push that further one way or the other, we could be flatlining for a little bit of time. But as I said, really, really well-defined levels right now out there, with kind of 1550 on the downside, 1625 to 30 on the upside. So do watch out for that. 1655 actually really key resistance level there, which is the 200-day moving average. Now, for the person who was put out by the new Olympic lanes coming in, I'm going to just reiterate my euro-dollar view, and I'm still very bearish. A break below 120.45, that's now the key level. So that's the key low from yesterday. That would open the door not just for a move below 120, but even retesting that kind of just below 119 level that we saw 2 years ago, or just over 2 years ago, back in June 2010, when we saw the first of the Eurozone of the Greek crisis really come to a head. Good support or good resistance lies at 121.80. But as I said, very, very good support around that 120.45-ish level, 120.45.50 level. And that is really, really key and very important at the moment. And really, when we get around there, we could see a bit of a bounce around there. As I said, so we've got a lot of data out today. We've got the IFO, GDP, with CBI coming out of the UK at 11 as well, and then in the US we've got those new home sales. There's also some speakers. The French finance minister is meeting with the Spanish finance minister. Remember, any type of news, so it's quite difficult to kind of predict which way we're going because of this huge amount of event risk and the fact that markets are very sensitive to any type of headline, especially ones that's coming out of Spain. So if we were to hear something, potentially about the regions in Spain, any more bad news. I mean, a lot of bad news is in the price already. We have to see it. But I do think this gold chart is incredibly interesting because it just shows how we are flatlining, which also does, in some way, reflect to me that potentially, things will be sticky around these major levels. So do kind of watch out for that. That's kind of the key thing I'm going to say. The other thing I want to show you, just bear with me a moment, is my S&P view. Some of you will know who joined. When did I last do one? Goodness, it was quite a while ago now. I guess it was about a week ago that I did, or a week on Monday that I did my last webinar, but I really pointed out the S&P. I thought that was a really important one. So with the S&P, as you can see here, still in an upward channel. Let me just draw that. Hang on. Still in an upward channel, for sure. Let me just look here as well. We have still, at the moment, got a series of higher lows. However, we are testing this level, which also coincides with the 50-day moving average at 1330. That is a very, very important level because really below there does open the way to that kind of 1275 level. So that low from back at the beginning of June. So there's a bit of support there around the 1315 mark, which is the 200-day moving average. Obviously 1300 is a key level as well. But then you've really got that 1280, 1275 level. So there's a lot of support on the way down. And again, compared to what's going on in the world environment, there seems to be a lot of, the S&P seems to be remarkably resilient to some of the bad news out there. So in that sense, we'd probably look at the S&P. We would certainly probably look at the S&P being vulnerable to some further downside if we get an even worse economic outlook. And right now, we don't really see things getting any better. Europe and Spanish bond yields are rising incessantly, and there doesn't seem to be a way to sort Spain out. And Spain is a big problem because we don't know how much it's going to cost to support it. We don't know if it can be supported. We don't know how much it's going to cost to bail it out. We don't know if there's a political will to bail it out, and that's kind of the big problem here. And the S&P won't be immune to that. This is not just a European problem. This is a global problem. And the S&P just looks a tad optimistic at the moment. So, this key level here now at 1330 is really important. If we get below there, then really a test of that 1300 level, maybe even 1280 in the short to medium term. Okay, everyone, that's kind of about it from me. I'm happy to take a question if anyone has any. Okay, it doesn't seem like anybody has a question. Let me know. Anyway, please do join me on Friday for my next session. Good luck with trading. Good luck with getting into the office. What were those? If you're working in London, what were those Olympic lanes or everywhere? Let me just check. Yes, euro dollar did just spike up, but it really hasn't spiked above that kind of 120, 110 level. Was there a massive level? Could just be some sort of fix. Could have been just kind of some sort of euro fix. We didn't get too much out. One of the Nowotny was talking, but things don't go down in a straight line. So I haven't seen anything that's directly come out about that. And remember, we have got the IFO coming out, and of course that UK GDP. So the next hour is going to be really important for kind of economic data. So do watch out for that as well. And we think that any strength in Eurodollar will probably be used as a bit of a selling opportunity. Okay, everybody, thank you so much for joining. Good luck with your trading this week, and please do join us on Friday.